Taxes in India, a topic everyone loves to debate. Are they truly high or is it just a myth? Today we'll break down the facts, uncover the truth, and understand how taxation impacts us all. Let's get started. In India, taxes are of two types. Direct taxes, like income tax, where you pay based on your income. Direct taxes are levied directly on the income or wealth of individuals and organizations. The most common form of direct tax is the income tax, which is calculated based on the income earned by an individual or a business during a financial year. The income tax system in India is progressive, meaning that the tax rate increases as the taxable amount increases. This ensures that those who earn more contribute a higher share to the nation's revenue. On the other hand, indirect taxes like GST or goods and services tax are added to the price of goods and services. Indirect taxes are not directly levied on the income of individuals, but are instead included in the price of goods and services. The GST is a comprehensive, multi-stage, destination-based tax that is levied on every value addition. It has replaced many indirect taxes that were previously levied by the central and state governments. Income tax is progressive. The more you earn, the higher your tax rate. This progressive nature of the income tax system ensures that the tax burden is distributed according to the taxpayer's ability to pay. Higher income individuals and businesses are required to pay a larger percentage of their income in taxes compared to those with lower incomes. But is this system really heavy on taxpayers? Let's dig deeper. While the progressive tax system aims to ensure fairness, there are concerns about its impact on taxpayers. Some argue that high tax rates can discourage investment and savings, potentially affecting economic growth. Did you know that only 6 to 7% of India's population pays income tax? With over 1.3 billion people, the number of taxpayers is relatively small. This raises an important question. Who really bears the financial burden of running the country? Most people earn below the taxable limit. A significant portion of the population lives in rural areas or works in informal sectors where incomes are often not high enough to fall under the taxable bracket. However, they contribute to the economy through indirect taxes on goods and services. For those who do pay, there are deductions like HRA, Section 80C for investments, and 80D for insurance to reduce tax liability. These deductions encourage savings and investments among taxpayers. For example, Section 80D provides deductions for health insurance premiums, promoting the importance of health coverage. These deductions can significantly reduce the amount of tax one has to pay. It's crucial to understand the various deductions and exemptions available to make the most of the tax system. Consulting with a financial advisor or tax consultant can help in planning and optimizing tax payments. GST, or the Goods and Services Tax, is a comprehensive, multi-stage, destination-based tax that is levied on every value addition. Introduced in India on July 1, 2017, it aims to create a single, unified market. However, it has often been criticized for its high rates, with the highest slab at 28%. This has led to debates about its impact on the economy and the common man. Essentials like milk, grains, and fresh vegetables are taxed at 0%. This ensures that basic necessities remain affordable for the common people, especially the lower income groups. This 0% tax rate on essentials is a significant aspect of the GST structure, aimed at providing relief to the common man. On the other hand, luxury items like cars and tobacco fall under higher rates. These items are considered non-essential and are therefore taxed at a higher rate to generate more revenue for the government. This higher tax rate on luxury items is also intended to discourage the consumption of products that are harmful to health, such as tobacco. Most everyday goods are taxed at 5% or 12%. This includes items like clothing, footwear, and household appliances. The moderate tax rates on these goods ensure that they remain affordable for the average consumer. The government has carefully categorized items to balance revenue generation with affordability. While GST taxes consumption, does it hit the middle class harder? The middle class often feels the pinch of indirect taxes like GST. While the tax on essentials is 0, the tax on other goods and services can add up, affecting their overall budget. The debate continues. Let's compare. In countries like Sweden and Denmark, tax rates can go up to 60%. Even in the US, the top tax rate is 37%. Germany also has high taxes, with top rates around 45%. Japan's top tax rate is around 55%. India's top rate is 30%, which seems modest in comparison. However, Indians often feel overtaxed due to indirect taxes and lower incomes. Is it perception or reality? You decide. In France, the top tax rate is 45%, but citizens receive extensive social benefits. Canada's top tax rate is 33%, with a strong social safety net. The perception of being overtaxed in India is influenced by the lack of comparable social benefits. So while India's tax rates are lower, the overall tax burden feels heavier due to indirect taxes and fewer benefits. Ultimately, the perception of being overtaxed is a complex issue, influenced by various factors. Is it perception or reality? You decide. Our taxes fund infrastructure, healthcare, education, and defense. These funds are crucial for nation building. Taxes help build roads, hospitals, and schools, ensuring that essential services are available to all citizens. They also support public safety through police and fire services, and maintain public transportation systems. Transparency and efficiency in the use of tax funds are vital. Initiatives for digital governance and public meetings aim to ensure accountability. Paying taxes is more than a duty. It's an investment in our future, fostering community development and cultural enrichment. So, are taxes in India really high? The answer depends on how we look at it. While some argue that the tax rates are high, others believe they are justified given the services provided. Understanding the system helps us use it wisely. By knowing the various deductions and exemptions, we can make the most of our tax filings. What's your opinion on India's tax system? Do you think it's fair or does it need reform? Share your views in the comments below. We'd love to hear your thoughts and experiences. And don't forget to like, share, and subscribe for more insights. See you next time. Hey everyone, and welcome to the channel. Today we're going on a time-traveling adventure to explore the fascinating history of taxes in India. Yep, taxes. I know, it might not sound like the most exciting topic, but trust me, it's way more interesting than you think. So where do we start? Well, believe it or not, taxes in India are super old, like ancient times old. We're talking way back when people paid their taxes with things like grain, cows, and other stuff they grew on farms. Can you imagine paying your taxes with a cow? That's a pretty different system than what we have today. Then as time went on, things started to change. During the Mughal Empire, they got a bit more organized and started collecting taxes on land. This was a big deal because it became a major way for them to get money. Later on, when the British ruled India, they brought in some new tax ideas that are kind of like what we have now. A guy named James Wilson created something called the Income Tax Act back in 1860, and that was a really important moment for taxes in India. After India became independent, there were lots of changes to make taxes simpler and more modern. One of the biggest changes was something called the GST, or Goods and Services Tax, which happened in 2017. Think of it like this. Imagine a bunch of different taxes all getting combined into one big tax. That's basically what the GST did. So why is all this history important? Well, it helps us understand how our current tax system works and why it's so complicated. It also shows us what could be done better in the future. Thanks for sticking with me on this tax journey. I'd love to hear your thoughts. What do you think about taxes in India? Let me know in the comments below. And don't forget to like, share, and subscribe for more videos like this. See you next time. Hey everyone, and welcome back to the channel. Today, we're going on a tax adventure in India. I've got a special guest, a tax pro, who's going to answer all your burning tax questions. Let's do this. Cut to a faceless interview setup with questions appearing on the screen. Question on screen. What are some common wrong ideas about taxes in India? First question. What are some things people get wrong about taxes in India? Expert's voice. Lots of people think everyone pays tons of taxes. That's not true. Most people pay less tax than you think, or sometimes no tax at all. Some people also think the government doesn't use our tax money wisely. But if you look closely, it pays for important things like hospitals, schools, and roads. Question on screen. How can people and businesses handle their taxes better? Next question. How can you and your business be smarter about taxes? Expert's voice. If you're a regular person, keep track of how much money you make and spend. Things like insurance and special savings plans can help you pay less tax. If you own a business, keep good records, and maybe talk to a tax expert. They can help you save money too. Question on screen: what tax changes might happen in India? Last question: what will taxes look like in India in the future? Expert's voice: taxes in India are going to get easier and more online. The government wants to make paying taxes simpler and clearer. There might be some new tax rules to help the economy and people in need too. Big thanks to our tax expert. You're the best. If you have more tax questions, leave them in the comments below. Don't forget to like, share, and subscribe for more helpful videos. See you next time. Hey everyone, and welcome back. Today, we're going to look at some real-life examples of how people and businesses in India manage their taxes. These stories will give you some helpful tips you can use too. Let's jump right in. Cut to a faceless animation of a young professional. This is Reena. She's a software engineer in Bangalore. Reena saves money on her taxes by putting money into special savings plans like the Public Provident Fund (PPF) and Equity-Linked Savings Scheme (ELSS). She also gets tax breaks on the interest she pays on her home loan and the money she spends on health insurance. By planning her investments and expenses carefully, Reena lowers the amount of income she has to pay taxes on, which saves her a lot of money. Cut to a faceless animation of a small business owner. Now let's meet Raj. He owns a small store in Mumbai. Raj keeps really good records of all the money coming in and going out of his business. This helps him get tax breaks on things like rent, utilities, and employee salaries. He also uses the GST system to get credits on the things he buys for his business. Raj talks to a tax expert to stay up to date on all the tax rules so he can make smart choices that help his business. Cut to a faceless animation of a freelancer. Lastly, we have Priya. She's a freelance graphic designer. Priya uses computer software to keep track of all her income and expenses. She gets tax breaks for things she needs for work, like software subscriptions, internet bills, and office supplies. Priya also saves some money from each job so she's ready to pay her taxes. Because she's organized and plans ahead, Priya manages her taxes well and avoids any penalties. These examples show how important it is to plan ahead, keep good records, and talk to experts. Whether you're a regular person or a business owner, managing your taxes the right way can save you money and help you be financially secure. That's all for today. If you like these examples, tell us in the comments below. And don't forget to like, share, and subscribe for more helpful videos. See you next time.